charts. Yeah, watching the flow, candles rise up, then they drop down low. Pips in his pocket, he's stacking it tall. Market structure trader, he's got it all. Open and range, it's the key to the game. Breakout moves, profits calling his name. Market structure leads the king. Trading waves, let the profits sing. Mean reverse and he's locked and loaded. Like the banks, his strategy's coded. Just don't lie, he reads every line. Forex indexes, he's making it shine. Positions held with precision and grace. He's in control, it's his trading space. Open and range, it's the start of the show. He's a pro, yeah, he's running the flow. Market structure leads the king. Trading waves, let the profits sing. Mean reverse and he's locked and loaded. Like the banks, his strategy's coded.
Good morning, everybody. How are we doing? Happy Monday. Mic's working. It's a bit of a funny light coming in today. And put the lights on, that's why. There we go. You see me now. How are we doing? Morning, everybody. Morning, ladder. Right. So market is just opened. Where are we today? Let's have a look. There's the previous close. Can't see the lines today. There we go. Down there. Previous close. Okay, so we're opened up. It's not a bad gap today. So decent size gap down potential today. We'll see where we go. Big move up at the end of the open. At the end of the market yesterday on all the indices. So it's been a bit of a manic week this week. With the interest rates driving the market obviously a little bit crazy yesterday. If you look at the US pairs, if you look at everything yesterday, huge moves, 250 ADR moves on the dollar, all over the place basically yesterday. So the yen had a very strong move to the downside. Canadian moved along with the dollar. So big day yesterday. So this week has been absolutely crazy, obviously with what's going on in Iran still, but mainly with interest rates and what the central banks have announced for interest rates moving forward. So we were anticipating continued cuts this year. We are now anticipating up to 0.75% increase across pound, euro, not the dollar, but the dollar is not going to be dropping rates and likely to put 0.25%, maybe even 0.5% on their rates as well. So we've flipped literally in the last week from bearish to bullish on interest rates. So all currencies changed. So this week, obviously, we had CPI come out as a slight miss for the Canadians. We had the first interest rate came out as an increase for the Australians, which was forecast anyway. But very little impact off of that if you look at the Australian pairs. So this week. Obviously, we haven't really particularly gone far. Obviously, Aussie yen's moved, but so it's been a bit of a volatile week, but no real massive strength for the Australian dollar at all off the back of that. PPI came out very bullish for the US, obviously bullish. The producer price index going up feeds into the consumer price index, which drives interest rates, obviously. So start of the sort of chain, if you like, being increased there. Bank of Canada kept rates the same. FOMC, we kept rates the same. Unemployment came out bullish again for the Australian dollar, but very little movement off the back of that. Bank of Japan again said they're keeping interest rates the same. Same for the pound, obviously, 3.75. But the forecast on that, as you can see, was a 0.09 instead of a 0.27. So everybody saying, nope, not increasing interest rates. And then we had the euro rate come out at 2.15, and Lagarde very bullish on increasing interest rates there as well. So obviously this war in Iran is going to drive fuel prices through the roof. Fuel prices are one of the core CPI inflation metrics. And when that goes up, you need to keep interest rates up to discourage spending, to stop inflation spiraling. So, it's very much all change everywhere this week with what's been going on with the interest rates. But yesterday, the market obviously got the final figure from the ECB, and that is when the move started. So when we got that ECB rating, you can see the market then sort of really took off. Obviously, with what's going on in Iran at the moment, that Strait of Hormuz still being closed. There's not enough oil flow anywhere. A lot of the production is now stopped because there's nowhere to store it. So they are working hard to get that strait open. The other main difference yesterday was obviously Trump. Did anybody see that interview with the Japanese president or prime minister, whatever she is? Prime minister, I think she is, isn't it? He mentioned Pearl Harbor. Yeah, I think one of the reporters asked Trump, why didn't you let Japan and your allies know about what was going on? You're criticizing them all for being way too late to come to your aid, yet you didn't give anybody any warning. Yeah, getting a battleship crewed, stocked, and out to the area isn't something you can just do in 24 hours, Mr. Trump. We need a bit of notice. Yeah. So he's having a go at obviously everybody for not getting out there fast enough, and then the reporter turns around and says, so why didn't you tell us about it? I said, we needed the element of surprise. You know all about surprise, don't you? You didn't tell us about Pearl Harbor. Not funny, is it, really? You're sitting down there with the Japanese saying, you didn't tell us about Pearl Harbor, did you? Idiot. Anyway, somebody please kick him out. So there we go. So the other thing that happened yesterday was Trump, I don't know where it is. Got to go back a long way in the news to get to yesterday. US Treasury issues Russia-related license. License allows sale of Russian crude oil and petroleum products loaded on vessels as of March the 12th, 2026. So he's lifted the sanctions on Russia so that Russia can now supply oil. So talk about confusion, yeah? We don't like Russia. We don't like Russia. We don't like Russia. Actually, don't worry about it. We don't like Ukraine now. So Russia, you can have all your oil embargoes lifted so you can make a load of money to beat Russia, to beat Ukraine. The guy's an absolute cretin. So anyway, so that's happened yesterday. So that has eased oil pressure. No pun intended. 5-minute ORB, there isn't one on the DAX today. That has eased oil pressure slightly yesterday, as you can see, but we are still not going anywhere. So oil this week, we are basically where I got out of my partials on Friday last week, I think it was. Where are we? Thursday, Wednesday, Tuesday, Monday. Yeah, Thursday last week. We are exactly back to where we were Thursday last week. So this last week, we haven't really gone anywhere on oil at all. We did spike up yesterday straight into $100 a barrel and flip straight back out of it. But we'll be interested to see where we're going at the moment with oil. So the fact that we've now got a flood of Russian oil coming in, and the Strait is starting to let some ships through, but Iranians are obviously controlling who can and can't, so it's only their allies can get through. I suspect what will happen is that we will get to a point where we're going to get that Strait back open again. So that is going to relieve a little bit of pressure on oil. So what I'm going to be doing, I think, is I'm going to see how we go today. But I think what I'm going to do is I'm going to take 50% of this remainder off. This is about 23k at the moment. So I'm going to take 50% of this off because I was expecting a continuation this week and we haven't got it. I was expecting to get up to here and we haven't got it. So the trade is not going as aggressively as I thought it was, or thought it was going to. No trade on the 10-minute ORB on the DAX either. Why is there no trade on the DAX? Oh, it closed at the highs. So we don't take trades if the candle closes right at the high. So I'm going to take, I think, 50% off of this, which means I'll have banked about 35k off of that trade, which is amazing. And I'll still have a runner on, but I don't think we're going to get to the lofty heights of Ukraine this time round, which I'm very surprised about because this situation we've got with Hormuz at the moment is a lot worse than that was. So I'm confused as to why oil isn't actually rallying harder. But the fact that it's not means, I'm going to take the rest of that off. Not the rest of it. I'm going to take half of it off. So that'll be my oil play today. So DAX, not an awful lot of movement. We have done a big enough range, but it's closed right at those highs. We often get limit orders placed and get too much slippage if that happens, so the EA doesn't take those trades. It's a nice propulsion gap forming there, so if this closes on the highs here, we'll take a 15-minute range break. We'll have two propulsion gaps back to back, so any pullbacks into there may well act as a catapult today. Upside on this, yeah, I mean, after yesterday's move, that really is your first support, which is kind of where that open was. We retested that area before bouncing and then finally breaking through that. So we've got a big old propulsion gap there, but I mean, it's all part of this big down move here. So this is all big one big move, really. So we're breaking back up into obviously sellers. But that is your first upside resistance, which is absolutely miles away today. So there's loads of room to the upside if we get that break up today. We'll see where we go. ADR wise, this is a new dashboard, by the way, that I'm using now. So I built this over the last few days and put it up on the marketplace yesterday if you're interested. It's not actually God, how am I going to find that? Hang on. I put this up on the marketplace yesterday. It's called the Ultimate Indicator Dashboard. Really simple name. I'll put a link in the description if anybody's interested. But it's basically a kind of a one-stop shop dashboard. So what it basically does is it's a replacement for all my other dashboards. So I used to have the ADR dash, the MRA dash, the RSI dash, etc. So I've scrapped those basically, and I've built one dashboard which is completely configurable. So basically what you can do is have as many symbols as you like in there. It can be minimized down, you can drag it around and stuff. But so basically you can monitor as many indicators as you like. So if you look at the indicator inputs in it, you can have loads of different indicators. So it's all the main stuff. Yeah, RSI, MACD, stochastics, CCI, ADX, all that lot. ADR is in there, average weekly range and average monthly range. Those are the ones that I'm interested in, obviously. And RSI is what I use most of the time. But there's all that stuff in there, basically. So it's all the main indicators that people use. And you can select as many as you want. So if you want, you can have up to 8. But if you only want 3, it'll only show 3. And you can basically pick whatever time frame you want. And then you can configure each individual indicator to whatever settings you want to have. And it's obviously got alerts as usual. So the alert system is really simple. You can either turn them all on or off up here with that main radio button there. Or you can turn off individual alerts, or you can turn off all of one indicator at once. So basically, if you get alerted to something and you find something is constantly alerting to you that you know about, you can just basically turn that off. Yeah. So if Aussie New Zealand hits RSI extreme, then drops, then hits it again, then drops and hits it again because it's accumulating, you can just turn it off if you've looked at it, basically. You can also click on each cell and it will open up a chart if you want to do that. I hate that functionality, but people like it, so I put it in there. So anyway, that's all done. So basically, I've got ADR, AWR, and AMR, which is what I mainly monitor. I've also got the 200 period moving average on there on the daily time frame to give me overall trend direction. And this percentage here shows you the percentage distance price is from the moving average. So look at let's look at oil while we're at it. Actually, that's a really bad example, I would imagine. Yeah, 43.1. So that's the distance. So I'm using the 200 moving average, obviously. So it's the distance basically from the moving average as a percentage of price. Let's pick something that's actually a bit more logical, like the Swiss yen. So you can see there that price there, distance from that moving average is 4.2% of price. Yeah, so you can set an alert up. So when it gets really far away from a moving average, if you wanted to use it for mean reversion on the 20 or the 50 or the 72, maybe on the daily or something. When it gets far away from the moving average, obviously, you can then take a mean reversion trade. So you can set it up to alert you when it gets certain percentage distances away. That is obviously another mean reversion one. And there's your RSIs. So there's no RSI alerts today. There we go. Okay, it's long on the DAX. So fairly decent range today. Pushing quite nicely. So we've got 3 bull candles in a row there. So bulls in control, we're above the moving average, so looking for a pullback into propulsion. Not a great stop loss today, is it? Hopefully that first propulsion gap will hold. We'll see where we go. And let me just catch up on the chat. Morning was Jack Road. I agree, out of respect, he should have used another example of but what a stupid question from the Japanese journalist. I know. It was a bit of a stupid question. Like, why didn't you tell us you were going to do a surprise attack on Iran? Because then it wouldn't have been a surprise. But anyway. Ugh. Change of time when DAX opens is just for 2 weeks. DAX doesn't change. DAX always opens at the same time. It's only the US indices that go forward an hour and then we move back again next on Sunday. Yeah, clocks change. So back at normal times next week, 2:30 UK time. The barrels at sea is what needs to drop first. Yeah, which will drop hard next week. As then supply is really restricted. Yeah, I think it's really difficult to tell what is going to happen. Because we've never had this situation before. The thing we don't know at the moment, really, is how much infrastructure is damaged. So the supply basically can start up again. As soon as the Strait opens, supply can start, which is fine. But you've got ships now which are 3 weeks behind supply. You've got production, which is now around about a week to 2 weeks behind because the storages are full. And also storages have been destroyed, and also production plants have been destroyed everywhere. So we don't know at the moment what impact it's going to have on oil production. Obviously, there's excess everywhere. Everybody's got an excess. They've all got stores. So we can all get along and survive, but it's the long-term impact on production as whether we can keep up. And that is the thing that is the unknown at the moment. So until we've actually got the Strait open and this thing's calmed down in Iran and everyone can figure it all out, I don't think we know where this price is going at the moment. So it could come crashing straight down as soon as the Strait opens. I would imagine it will. As soon as that Strait opens, we will get a drop in the oil price. I'm pretty sure, because the market is going to relax. But I think what will probably happen is that I've got absolutely miles to play with at the moment. So this is why I want to hold it. If we're going to pull back, I don't think we'll get back down below the 24 MA, the monthly moving average, because the price isn't going to ease that fast. But who knows? Say, whenever you get these types of trades, you know, it's we've never had this situation. So there's no precedent we can use. The only precedent we have at the moment is the Ukraine conflict. And that is a different type of supply restriction, because it was a sanction and it was pipelines getting closed into a small continent. Yeah, into Europe. This is worldwide, absolutely worldwide. And every country is affected by this in some shape or form. You might only get 1 or 2% of your oil from those sources, but that's still 1 or 2%. But other countries are getting 90% of their oil through that source. That's a major problem, and that will have a knock-on effect on other countries. So, you know, it's one of those things that just spirals. So it's very hard to predict, but it's holding at the moment. So I'm going to give it today. If we close up today, I will probably do a partial. I've got 5 trades on. So if I close up today, I'll probably take 2 off. If we close sort of low today, I'll probably take 3, because what I'm worried about is over the weekend, the Strait of Hormuz opening, and we get a gap down situation on Monday. So I want to take some off if that is going to happen. If the Strait doesn't open on Monday, anything can happen, can't it? So, but I can't sit there and watch my P&L anymore. It's driving me nuts. I'm seeing it like jump up, jump up, jump up. You know, it's just up, down, up, down, up, down. In the same way as it was when I took that partial off. Yeah, it pushed up a little bit further, but that was it's horrible watching it. Pulling back on the DAX. So watch this propulsion move for a potential add. Also worth to look at Brent. WTI is a little more US risk. Yeah, but I'm not in Brent. So I'm not bothered what Brent does. Because it's not me. But yeah, Brent, obviously, we got much bigger. This is obviously, like you say, it's more volatile. Same as gas price. Gas price, you see the gas price yesterday. Oh, made oil look ridiculous. But yeah, the obviously West Texas oil is a very different thing to Brent, but we buy oil on the world markets. So if Brent goes up, we won't get a drop in WTI because they'll charge more for it. So it's all interlinked. But yeah, Brent is going to obviously be much more volatile. So there's that 113 that we got up to on Brent. If you look at WTI, same price basically, but obviously we've had additional volatility, but they're not massively different. But you can see the obviously drop that we had there on the Russian news. So it's an interesting time at the moment. So watch this DAX. ADRs, we've got New Zealand dollar yen getting close at the moment. Euro New Zealand, so a bit of movement in the New Zealand dollar. Everything else is miles away at the moment. So it's quite nice, this dash. I've color coded it as well. So you can see what's getting close to ADRs and AWRs. Obviously just turns red when it's hit a level, but and when it's nothing's moving. So again, there's loads of uses for this new dash from this perspective. Obviously, anything that you see in green hasn't really moved today. So these are your breakout opportunities, because we haven't done the vast majority of our average daily range yet. So you should be looking for breakout moves. Anything that has moved, obviously, and hit its ranges, you should be looking for mean reversion plays. Anything that's getting close, you should also be looking for mean reversion plays. But also, if you're in them, you should be looking at potentially getting out of them. Yeah. So there's loads of uses having it color coded like this, because you can go and look at Aussie US and say, all right, well, that hasn't moved today. So we've got opportunity on that for a potential breakout. Yeah. So bracket that hourly candle, because we haven't gone anywhere. So assume that we're going to at least get to 75% of the average daily range if we don't do an ADR, which we do sort of 40, the average on this. I can't read it. 44% of the time we get to ADR. So there's a 60% chance we're not going to get there, roughly, isn't it? 65% chance, 55% chance that we're not going to get there. So, but we should get a move of some description, shouldn't we? So there's a lovely little breakout opportunity on that. So really useful dash this now for sort of more opportunities, basically. Same with the AWRs. Yeah, if you're getting towards Friday, which we are today, and we haven't had, there's nothing green there today because we've had loads of movement this week. But if there's anything green there Friday morning, there's a good chance we're going to get a move potentially. Yeah. Same with the monthly ranges. If we're getting towards the end of the month and we haven't done any movement, we're probably going to, aren't we? So, right, we are back in propulsion. It's unfortunate that if that had closed a little bit down, we would have taken that break and our stop would have been a bit further away. But that's a bit of a precarious stop today. If we break to the downside, let's see where the target is. Yeah, it's plenty. So first part of that move, I mean, this it's not a great propulsion gap. This whole thing, as I say, is propulsion today. So that's TP, which is that support. So we've got this area here, basically, which has been support. That's a good upside target for today. It's also going to be a nice retracement on that leg down. But the market may want to do a V-shaped recovery on this. We'll see. Probably not going to happen today, is it? I wouldn't imagine. It's going to stop out. So first propulsion gap's filled, so that'll be retested. So going to stop out on that one today. Anybody got any FX pairs they want to look at? I'm still in Aussie US. I can't get out of this. It's doing my head in. This thing is just stuck, like proper stuck. So we're now at what, 1, 2, 3, 4, 5, 6, call it 7, could even class it as 8. 8 weeks, 2 months, absolutely sideways, just not moving, absolutely stuck. Just can't do anything with it. It's a bane of my life at the moment, this thing. I was so close to getting out of it earlier in the week, and then it just turned tail and ran again yesterday. Look, it's beautiful. It's looking, and then obviously the US, Trump again, screwed it up. But yeah, just can't get out of this at the minute. I'm really stuck in it. I'm going to have to close it, I think, which is partly why I might just use the oil profit from today to get rid of that totally, and at least then I'm flat. And then I haven't got to worry about it anymore. A lot of stuff stuck this week. Stopped out the DAX. So we'll see how this propulsion gap holds here. So you should be looking for buys based on the initial 15-minute open today. However, we are bearish. We are in a bear market. So tough calls at the minute. Everything's a tough call at the moment. All these gaps we've got to fill on the DAX. Really, really gappy market, isn't it? It's awful at the minute. Look. Filled that one, but yeah. After that move we had on Wednesday, this weekly low here, which is obviously what we retested there, upside target today, that I will be watching for shorts if we get there. All this propulsion move here, watch that for shorts. Got to get there first. Can you explain how to use your statistics indicator regarding gaps? So yeah, all it is I mean, it's not great statistics today, but just tells you how many times in the past 300 days, statistically, this type of move has happened. So today, there's your previous close there. So today we are opening up above the previous session. Yep. And similar gaps of a similar size within 15% variance today fill 37% of the time. So there's been 30 gaps of that size in the last 300 days. And of those 30 gaps, 37% have filled. Yeah. So the probability is that we won't fill that today. Yeah. So there's a higher probability of not reaching that price point. That's literally all it's telling you. So you want to be looking for longs. So you can either take a long at the open, or you could wait for a pullback and then long it, because the probability is we're not going to hit there. That's literally what it's telling you. Gives you statistical edge. That's all it's saying. It doesn't tell you how to get in. It doesn't tell you when to get in. It tells you which direction is the most likely today, or where we're likely to go today. So the previous session high gets hit 80% of the time. Yeah. Which is this. So that is your previous session, previous daily high. 80% probability of that being hit. Yeah. So buy it right now with a stop loss under there and a risk reward there. That's a trade idea, isn't it? Because there's an 80% probability of that being hit. Just maths at the end of the day, isn't it? That's all it is. Similar gaps and opens. There's only been 8 instances in the past where we have gapped in the same direction of a similar size within a 15% variance. And 50% of those have filled. So it's looking like it's less likely that we will get there. That's all it's saying. But that doesn't mean we won't get there. It's the same as ADR. Everything is probabilities. Average daily range gets hit 45% of the time, which means that 55% of the time it doesn't get hit. So if you move up 80%, yeah, there is a probability, a higher probability you won't move up to that ADR level because it hits it less often than it does, which gives you a 5% edge in the market. All maths. All trading is maths. It's mathematics, basically. But that's a big gap today. But there's a video on it on the website. If you go and have a look on the... when it loads. Okay, so that video with my cheesy face on it will give you a overview of how to use it. Okay, so there's a good buy opportunity right now. So all these propulsion gaps are now filled. So anybody caught short, unfinished business is completed. Yeah, we're buying at the average price. There's less probability of hitting that than there is hitting that. So wait for a bull candle, get in. If you want to do the not going to be a great risk reward, but previous day's high is likely to get hit. That gives you a 1.1.5. There's a trade idea. That is a fairly decent trade. Only 1.5 are, but the probabilities are in our favor. May work, may not. Just reading the news this morning to see if there's anything I haven't looked. IEA report recommends avoiding air travel. Yep. Anywhere near Iran, obviously. Seeing if there's anything else. I haven't actually scanned through it this morning. That's super interesting, as you say. If it puts in a decent retrace, you could go long with the stop prior close. Yeah, so if you want to trade it on a higher time frame, obviously you can do that as well. So you could look at longer term targets. So you could go for something. So there's your previous close. So you could go for that support. Maybe that gives you a 1.5 hour upside. Obviously, you could go much bigger. If you think we're going to go for an ADR today, you could go for something like that, which is giving you a 1 to 4. But you know the probabilities are that we won't do that today. So long order obviously is a good idea. But, you know, statistics are statistics. So there's always a probability of that happening. Yeah. But if you look at the Globex low today, that's not set up correctly, that one. Oh, we don't have Globex. Of course we don't. So yes, I was going to say Globex low. So it doesn't really work. This is set up for US. This is why this was on the S&P 500. That one's set up for the S&P. Yeah, let's see. So pulling back at the minute to the open. Better to have that stop just under that open, just in case we retest the open and go. Is that gap info replicated by the EdgeStrat Pro website? Yeah, sort of. Yeah, I haven't compared the two, but should be. I mean, all the calculations are pretty much the same. So today's gap is 209.8 according to Nix, and we opened inside with a gap up. Yeah, statistics are different on here because we take the open position and gap up direction and size and do the maths on that. So you'll find the statistics are probably a little bit different. So 70%. This is the thing. This is a different calculation. It's slightly different the way that this works. I don't know which is the best, to be honest, because this works with this is just a similar gap. Yeah. whereas this is a similar gap. Can't remember what the calculation is for that one, but it also takes the gap direction and the open position into account, which is why you've got 92 sessions here. Yeah, over here you've only got 30 sessions. Yeah, out of 300 days, whereas this has data going back 5 years. Yeah, 1,584 sessions. So this is much more sort of detailed data, basically. So that takes a gap of a similar size plus a percentage. So if you change that to just 200, that drops the statistics ever so slightly. Doesn't change the actual fill rate, but if the other one goes 15% either side, so that would be 30 either side, wouldn't it? So it'd be 170 to about 240. Only 3 sessions. Look, not enough data. Not enough data to go on. Uh, 50%. There's no statistical edge there either. 50% of opening ranges break both sides today. So of the 15 minute. So we have broken the upside. So again, there's a 50-50 chance that we might pull back down again today. You know, use statistics as you see fit. Basically, the idea of statistics is to give you a percentage probability in your favor. Yeah. So you never take a 50-50 trade. There's no point because you're not going to make money. So you always take a trade which has got a statistical advantage. Yeah, so there's more chance of that than there is of that. Doesn't mean that can't happen. But if I take that trade 10 times, statistically, I'll make money if I have a 1-to-1 risk-reward ratio. So it's all about putting the trade in your favor. Even if you use a 1-to-1 risk-reward ratio, if you've got something that's got a 70% strike rate, you're going to make money. It's all about making money using statistical edges. So if you've got a 50, so every single trade is a 50-50. You take a 1-to-1 with a 50-50, you don't make money. Yeah. So all you need to do is if you want to take 1-to-1 risk rewards or 1 to 1.5, you can find trade ideas which are 1.5 R 1,000 times a day. Yeah. The big ones are a lot harder to find, but anything that's a 1.5 R risk reward ratio, you can find 1 million of those. So if you know statistically that something happens 60% of the time, you make money. And you don't need to get a lot of movement to make money. You just need an edge. So if you know that yesterday's high gets tapped 65% of the time when the market gaps up towards it, and then if market pulls back and you can find a 1.5 R ratio, if you take that trade 10 times over the next 2 months, when the opportunity occurs, you have an edge. That's it. So you're just literally looking for edges. However big or small they are. It's just maths. Euro odd. Euro odd. Euro odd, the collapser. So we've pushed up. Another reverse alert going. So market structure obviously broke high there. And then we've retested propulsion. Broken again to the upside. So you've got lovely market structure forming. What you need is a break of the 2-week low, basically. So when we get out above that 2-week low through that propulsion gap there, which is what we tapped into and rejected yesterday, although that was a news spike, really. You're pretty much safe, but yeah, it's getting through that support. You got the monthly level above as well, which is also that weekly level. That's that weekly high. That's this last week's high, which is what we tapped into there. So once you're through that level there, you should be able to get to 200 ADR, hopefully. But yeah, it's a nightmare. Everything Australian dollar related at the moment is a nightmare because of oil, gold. And look at what happened to gold yesterday. Bye-bye. Bye-bye gold. Wow. Nuts, wasn't it? That thing collapsed. Absolutely collapsed yesterday. So ADR on gold at the moment is 1470. We put in 36.7 yesterday. So huge move. Obviously, it started the day before, but yeah, massive move on gold there. Selling off gold, expecting the dollar to rise. So we are almost back at where we were within 225 ADR today, look, of where we were on the ultimate pullback. So if the market gets back down to here, we may well just return back to normal range sizes. Will this volatility be over? But who knows? Again, another one of those, who knows, biggest parabolic move in history we've just seen, following the second biggest parabolic move in history last August. What the hell do you do next? After that, gold is not the same instrument. Everybody trading any gold strategy out there that they've traded in the past, which is more than a year old, is not working. This is not gold anymore. This is something completely different. This is, look at what gold used to do. We used to get a couple of big months like that, and then that was normal price action. Then we got, obviously, the BRICS situation with gold export or gold transactions. And then we had whatever that was, and then whatever that was, and then followed by all this stuff. So this is the new norm. This is not anymore. Every strategy that, you know, all these EAs out there which trade gold and have been successfully trading gold for the last 5 years, yeah, not anymore. Totally different. This is what people don't get about trading. This is why strategies do not work, that you will find. If you find a strategy that's 3 or 4 or 5 years old, it won't work because the market regime is different. Market regime changes. ADR changes. ATR changes. Everything in trading changes. If you put an ADR indicator on your chart, probably not the best one. Where is ADR? ATR. There. Find it. Yeah, so anything that worked here didn't work there. And it didn't work while all of that was kind of going on. Then it got a bit bigger, and then it got tiny, then it got bigger, and then this happened. Yeah. So if you've got a strategy which was working there, it started failing here and you dumped it. Anybody finding that strategy here will have had a modicum of success with it, but it was still way more volatile. They would have made money here, but then it would have started to fail again there, made money there, and doesn't work here. So anybody that's developing a strategy over the last year to try and trade gold as it is now, if it returns to this from there onwards, that strategy developed here won't work there. Yeah, this is why people find trading frustrating, because market regime is constantly changing and evolving. Yeah, and you're never going to get the same result with a strategy developed over this period. If you develop a strategy here, it won't work here. If you develop a strategy here, it won't work here. Gold is not what it used to be. Different beast now. So is oil. I mean, oil is a different beast now, isn't it, to what it has been. Big old boom, and then Ukraine, and then all this stuff. But that $55 a barrel is a pretty safe buy. It always is, always will be, because it's uneconomical to produce oil at that price. Look at it today. We're off again. Look, in the last hour. Stopped out on that long. That 70% stat fill rate is basically saying no edge in buying a dip. This is what drives me nuts about statistics. Recent volatility suggests it could fill. Yeah, the other thing about statistics as well is, don't pay any attention to any of this while everything's going on at the moment. None of this is going to make any... So statistics basically, like I've just shown you there, will work when the market is normal. When the market's not normal, statistics aren't going to work, are they? Yeah. So look at yesterday on gold, for example. Yeah. That move that we had on gold yesterday, is abnormal. That is abnormal. That is the new normal, which is twice the volume of the old normal before the rally in August. Yeah. So where are you placing your statistics? If your statistics are being measured over the last 6 months, those statistics are going to give you a completely different picture to statistics from the previous 6 months. If you merge those statistics together into a year of weird statistics and normal statistics, you get something in the middle. No use whatsoever. Which is why I only have data produced for stock indices, because stock indices go through cycles and statistically they don't really change that much. If you look at a stock index, you will find over time that we get ATR increases, but you have crashes, yeah. So basically, we have Trumps, we have bear markets, and we have bull markets, yeah. And then we have things like COVID, right? So things like COVID and Trump tariffs are black swan anomalies. They don't happen very often. You can't see that behind my head, but that obviously ATR, you can see it poking out the top there. These are abnormal. But if you look at stock indices overall, yeah, and obviously with what's going on at the moment, yeah, it's an anomaly forming. But the vast majority of stock index movement is stable, is the same market regime. So because the market regime for stock indices is bull, yeah, because stock indices are manufactured and designed to increase in price, because you have in the DAX, for example, 40 stocks, which all are high performing stocks. If number 40 goes crap, number 41 takes its place. So you would have nothing but top performing stocks, which means stock prices will go up because they are performing businesses. They are producing healthy P&Ls. They've got a good business model. They will continuously increase in price, which is what stock indices do. So when you're in a bull market, you have stability, which means you can rely on statistics. When you're in a bear market, you can't rely on the statistics from bull market data. So you need to find bear market data to find out what the normal is in a bear market. And in a bear market, volatility is higher. So it's a lot easier to rely on stock index statistics. But right now, today, this is not normal, is it? Yeah. Look at that for a day on the DAX. Find another day like that. You ain't got one. Yeah. Do we normally gap like this on stock indices? No. Yeah. This is totally abnormal. Look at the ATR. Yeah. We're in a highly volatile scenario. So those statistics in ISLA and in EdgeStat Pro right now, it's not going to work as effectively, are they? They will still work some of the time, but I mean less so right now than normal. because it's just not a normal market. Very abnormal. I've just changed the DAX ORB time frame and everything. That's really going to screw up the ORB EA, isn't it? Anyway. So going to trigger short. So there's that 50% statistic I looked at a minute ago. When we break the long, 50% of the time we break the short. Not really useful, is it? 50-50. You can flip a coin and get that. Doesn't look like we're going to trigger short either. So we are still higher high, higher low on that 5-minute candle. Bear candle, but still bullish. Not very convincing. See if we can break to the downside. So basically the open is holding at the moment. I got a feeling today is going to be, on all indices, is going to be a little bit sideways. You know, the amount of news that we've had this week and the amount of movement that we had yesterday. The market's going to be in a bit of shock today because obviously we've had so much movement and there's no news today to drive it. So I get the feeling we might see some rotational markets today. And if that's the case, you want to be a little bit careful with breakout strategies. Obviously, mean reversion would be the thing to do today. But downside gap fill, obviously, is if we're going to break short, will be your target. Because I've been flicking around on this chart, there is no target drawn in. So I'm going to put my hard TP down there, which will basically get back to 66 if it breaks short, 124 loss. So it's a 2R to the downside, roughly. So that's the trade today. I just get the feeling we're going to go into rotation today, though. So I'll give it the opportunity to play out. Big rejection wick there, look, on the hourly. So very bearish out of that propulsion move. We've also tapped into the previous day's high, look. And we're at the low of the previous day as well. So this whole area here obviously is resistance. So we'll see. We might get a breakdown. Triple witching today, is it? Triple witching hour. 3rd Friday of March, yeah. I would suggest that there was your triple witching expiries. With all the interest rate moves that we've had for the last 48 hours, I mean, if they are going to make a move today, I mean, triple witching, they normally do make a move on the day. But, I mean, we've had such a big move for the last 2 days. I would suggest that's probably done. Don't know. Might not be. We'll see. We'll find out later. Yeah, less movement yesterday. I say less movement. You know, this doesn't look like much movement compared to the previous day, does it? But ADR on this is 490. Did 390 there, so it's almost an ADR's worth of movement. I think I've actually got ADR 3 on this at the moment. Let me just quickly check if I change that back. Yeah, I'm ADR 10. So, yeah. So that was a pretty decent move yesterday. Very whippy, obviously, but don't know. Might be in for a big afternoon. We'll find out. a fairly decent Globex range gone in already, look, as well. So we've done about 30% of ADR in Globex already. So it's too bad, is it, on the US indices at the moment? We will see. Right, I'm going to leave it there because there's not an awful lot happening. The market's obviously very quiet so far today. As I say, and because of yesterday's price action, I get the feeling today might just be one of those days where we sit around, but you never know. We might kick off. Anything can happen at the moment, basically, with what's going on in Iran. You know, if they open the strait, everything's going to move. So don't forget, everything in FX is interlinked. So as soon as you get one thing happening, it affects all the markets because everything gets money pushed and pulled everywhere. So just keep an eye on everything at the moment. Obviously, there's a big opportunity for gap fills over the weekends as well. So just be careful. I'm trying very hard not to hold over weekends on anything at the minute, but it's not easy to do in position trading. Oh, that's the other thing I completely forgot to mention. The new position trader EA version 3. This is a development number 3.1. Ignore that. It's version 3. If you've bought the position trader EA before from my website, you can have this for testing now. It is still in development, but there is a hell of a load more features and functionality in there now. So it's got a lot more powerful, a lot bigger. A lot of the stuff that people asked for over the years, I've incorporated into this new version. So if you want to, it's in the Discord channel. If you want to test it, use it in the strategy tester. I am live forward testing it at the moment on a VPS, which is, I'm finding bugs, but it is, you know, they're not groundbreaking bugs. They're just stuff that's not quite doing. Most of the bugs I'm finding are with the market reversal alert signal. So if you're using the moving average or the 3-bar reversal signals, which is what I've always used for the last year anyway, that's all absolutely fine. But yeah, so that's available if you want to test it. So it's in the Discord channel, in the position trader EA indicator and support channel, basically. So anyone can actually download that and use it for back testing. So, you know, if you haven't bought it and you want to back test it, you can go and get it. It's all in there, but you can't use it on a live chart. So if you have purchased it and you've got a license for it, you can actually use it on a live chart as well. But use it on a demo at the moment because it is in development. Yeah, but I've got it running and it seems to be fine. So I'm doing more testing this afternoon in the members stream. Right, so there we go. I will leave it there. Either this is going to break short and get me back to profit for the day, or it's not, and it's just going to go into rotation, in which case obviously be reliant on the US markets. I really like your MRA indicator, which I use for day trading. But what is it that triggers the box? How can you ask that question? If you use it, you must know what triggers the box. Surely. But there's videos on the website explaining it. There we go, broken short on the DAX. Right, I'll leave you there. Anything else you need, let me know. I'll be in Discord or Telegram. Other than that, back this afternoon for members stream at 1 o'clock, not 2 o'clock. 2 o'clock next week. And then, yeah, back on Monday for normal session in the afternoon. So I will see you then, if not before. Have a good day.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzzing, traders peep. Lessons deep, no time to sleep. Market's a beast, league got the leash. Feast at the feast, his game's elite. Market structures his domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, lose he reads. Fibonacci maps the seeds. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guy. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy legends mode. Whoa, whoa.